Okay, so the next stock on this list is Snap. Now, Snap had a wild week. After Facebook earnings this week, the stock fell about 18% because of fears that Snap would suffer because of Apple's new privacy settings. However, that was not the case. Snap beat estimates on earnings, revenue, and user growth, and they also recorded their first profitable quarter since becoming a public company. So Snap's numbers came in at 22 cents versus 10 cents expected, and revenue came in at 1.3 billion versus 1.2 billion, and daily active users came in at 319 million versus 316.9 million expected. Their average revenue per user increased to $4.06 per user versus $3.79 expected. So overall, this was an excellent report, especially when plenty of people were nervous that Apple would hurt the company more than expected. When we look at this quarter charted out, we can actually see that this was a pretty substantial amount of profit for Snap to make. Again, this was the first time that they reported as profitable since going public, and since they had to deal with the same challenges that Meta had to, it's pretty impressive. Snap's CFO also said during the earnings call that Snap has been mindful of making privacy inherent to its product, and as a result, the changes caused by the iOS updates are likely to be experienced differently for their business than for others. When we look at the last 10 years of revenue and net income, we can see that the company has been doing pretty well in terms of sales growth. And on top of this, we can see that Snap's losses have become more slight every year. So overall, this is a pretty good chart. So when we look at the revenue versus expenses, we can see that only a small amount of the revenue is actually eaten up by the cost of revenue, and we can see that most of the revenue versus expenses goes towards research and development. Now, Snapchat provides some pretty helpful charts, and the first one here shows their active daily users each quarter. We can see that Snap has done a pretty good job consistently increasing its daily users. When we dig a little further into this, we can see this chart that shows user growth broken down by area of the world. While they're still growing in North America and Europe, the rest of the world is where most of the growth is actually coming from. And the problem is that a new user in Mozambique, for example, not to pick on anybody in Mozambique, where the average annual income is around $460 a year, isn't as valuable to advertisers as the US, where the average income is around $66,000. We can see this in the chart Snap shows explaining their average quarterly revenue per user broken down by different parts of the world. The US is still the dominant revenue driver for the company, and surprisingly, Europe produces way less than I expected. However, it does seem like a European user provides about double the revenue a customer located in the rest of the world does. When we look at Snap's forecasted earnings, we can see that the growth is currently projected to continue, with 2022 expected to be the first profitable year for Snap, with revenue and profits expected to grow from $4 billion and a loss of $640 million over the past year to $10.7 billion in revenue and $2.7 billion in profits by 2024. So when we look at the revenue growth, we can see that Snap is currently forecasted to grow at 40 to 30% over the next few years. But the issue with using this to value them is if they're growing at a much lower rate by 2024, the stock is obviously going to trade at a much lower multiple by then. So I think an appropriate growth rate should be about 20 to 25% growth instead. So a growth rate of 20% comes out to a fair PE value of 53, and a growth rate of 25% gives us a fair PE value of 80. So when we look at this valuation charted out, we can see that Snap has a pretty insane amount of upside, with a 2024 valuation projected of $91 for the bottom end and a top end upside of $138 per share. Now keep in mind that this does depend on the forecast happening. Snap will have to execute its business operations very well to meet these numbers, but still so far they've actually done a much better job than I think a lot of people are giving them credit for. Now I know a lot of people are skeptical about Snap, so just for fun, I cut the PE ratios in half. So a valuation of 26 to 40, and even then Snap still has a lot of upside, with a 2024 valuation between 46 and 69, or 17 to 76% upside. So I do think that Snap is a pretty good buy right now, that the company is actually doing much better than people realize. And as long as they keep doing what they're already doing, I don't see any reason why the stock price won't be moving up over the next couple of years. Now that video that you just watched is part of a much larger video where I covered earnings for multiple stocks. So if you want to see that video, click this right here. And as always, thanks for watching.